What's up, tax savers? So as we're getting to the end of the year and coming into January is when the last quarterly estimate is due. So I want to help you be proactive when you're thinking towards that time and help you figuring out whether you should pay those estimates or not. We get a lot of new clients saying, should I pay those estimates? I get these vouchers with my tax return. What should I do with those? And generally speaking, it's a good idea to pay those estimates because then it makes you owe less at tax time, unless you're going to do something with that cash that's going to earn you a good return on that money. Because essentially, if you don't pay throughout the year, you get a small penalty on the amounts that you should have paid based on last year's taxes quarterly. And that amounts to about a 3% penalty of the amounts that you should have paid each quarter. And so think of it as a 3% loan from the IRS throughout the year. So if you've got opportunities that you can either, if you've got some credit card debt you need to pay off that's going out at 15% interest, or you can invest in marketing, advertising, or some human capital that's going to help create more capacity to grow your business more than that 3%, then it's maybe a good idea to not pay those estimates and instead keep that cash and set it aside and make sure, still make sure you've got enough to pay come tax time, but keep that cash throughout the year to reinvest and grow yourself rather than giving it to the IRS. But of course, that 3% is guaranteed to happen if you don't make those payments. So that's 100% return on your investment by paying those estimates. If you're going to invest in the business and it might lose you money, that's just a risk reward thing to consider. And that's true with anything. So, just talking about debt, mention that credit card, paying down a 15% credit card is 100% return on your investment, 15%. So would you rather have, if you're paying off debt versus paying estimates, would you rather have 100% safe return on 15% or 100% safe return on 3% to pay those estimated taxes? Don't get behind on your tax bill, but if you've got opportunity with it, maybe consider holding on to that cash. So hope you found that useful, and we will see you next time.
Big battle, eeny, meeny, miny, moe, and flower, you're the chosen one.